Hey traders from around the world, how's it going? It's your boy Jeremy Alexander Newsom with Real Life Trading. Hope you're doing absolutely marvelously majestic on this Monday. It is indeed April the 11th and we're checking out the SPY right now. So here's my analysis this morning on the morning floor, and I still do think Friday's gap was pretty bullish. I still think that as of right now. I do think overall this week we move a little bit higher. I'm going to be patient on the bear call spread and I'll exit if I need. So what that means, I actually have an iron condor. 208, 209, 201, 202, 201, 200 expiring this Friday. So that would be a 20% ROI on the option strategy if the SPY stays above 201 and below 208 by this Friday. I got the alerts and everything placed. As of right now, we definitely got some higher lows, we got some lower highs, and we could break out in either direction. I would assume if we break out, it would be bullish, believe it or not, and that's pretty much all I got. Here's the weekly chart right now. Weekly chart, last week was an inside week, which means that the pressure is going to build, and that's mostly why I'm in the condor. I don't really expect a lot to happen. Maybe we slow down this week and then we pop next week. Again, I'm not entirely sure. But there's one thing I do know for sure. Earnings season is here, and Alcoa has kicked off earnings with not that much movement. That usually happens. Alcoa is the first in earnings season. It very rarely does a lot on earnings. Just trades sideways overall. And I would say if you're looking at trading Alcoa, wait for a breakout. It is above the 200-something moving average, and as I just drew, it's a little bit of a very short-term distribution channel-looking thing. Very tiny ones. So if it breaks out above here, I am at least bullish to neutral overall. A lot of traders ask the question, how do you trade our earnings, Newsom? How do you trade earnings? Well, here's how I trade earnings. I trade the day of the gap or the day of the release or the announcement. So usually when a stock has earnings, it moves pretty big after the market is closed to find a good place, relatively speaking, to buy and or sell the stock. So I play the day of earnings. Now, here's UNFI. UNFI did not have earnings today, but it did gap. And so I like to find the gap action and kind of analyze the gap. And usually on a gap, I will day trade and or swing trade if the setup is there. So UNFI was a classic gap. I'm a classic gap. And here's a little bit of a short-term support right there. This was a black candle, gapped down, and it was filling what's referred to or often called, there's a lot of names for this candle. Large day candle is what I usually refer to it as. I've heard the term hot candle. I've heard the term emotional candle, wide range bar, void. Those are all pretty popular. But it was opening right in the middle of a big white candle, so there was no short-term support or resistance on UNFI. So we were watching this on the 1-minute chart, mostly because I was hoping that it would form a hammer on the 5-minute. But here was the 1-minute chart on UNFI. So you had a nice little white hammer came in. Initially, I was looking at this by this. Once that candle formed, the third candle, we're looking at that by that. So our entry was 35.73 by the high of that, so 36.13. And the 35.73 was a limit fill, and the high of this candle was indeed 35.73. So I got a partial fill. A few others got a partial fill. Sean Bennett just absolutely took this trade to the cleaners. Mr. Hashtag Team Nashville for 2.25 R. So great job, Sean. I'll be seeing him tonight playing some softball. So really excited about that. UNFI, United Natural Foods, did very, very well. So another winning trade. I actually am still keeping the winning streak alive. It's very, very rare that I go 9 for 9. But I am 9 for 9 right now in my day trades. I can only think of 2 times that has occurred in recent memories. And again, honestly, guys, those results are they're not typical. I usually go 1 for 2 or 2 for 4 or 4 for 8 on any given week. Just so happens I haven't lost a trade since the Friday before last. Totally blown away. But I'll take the results. I'm excited about it. Another trade that we were watching today was Hertz, ticker symbol HTZ. And this trade was a nice bearish gap and go. Here was a short-term support. So you had some white candles gap down. By the way, this is a duplicate candle. I don't know why TradingView has been doing that recently. But anyway, it did gap down. So if you were watching this on the 1 minute, here's the truth of the matter. I was watching UNFI rather than Hertz. Hertz entry there, stop there, you simply would have lost on the trade. There's no way around it. Again, 50% of the trades don't work. If you did get triggered into that trade, you might have been able to move your stop down to here to lose about 0.6 R. So losing less than an R is always a good thing. Now, also, if you're wondering what an R is, 1 R usually equates to 1% of the account value of risk. That's what you're risking per trade. So on Hertz, if you would have lost 0.6 R, that's okay, right? That's the only way to play that one. Good try. We did end up playing this one again in the trading room live. So the one that we took was a breakdown of this support right here, and you had a tweezer bottom come in place at about 9:30 my time, 10:30 Eastern. Entry was 9:05. Stop was right there. Boom. Traded to our target 1 very nicely, and then target 2, a solid 2R trade. The other trade that we're in right now is PHH, and it is working, I guess, more or less. Entry was 10.53. Stop was 10.79. That was the original setup. And here's the support that it broke. So it got triggered in there. Right now it's just kind of hanging out. And I'm going to be exiting this one very soon if it does not trade lower. So just keep in mind, everything I'm talking about is subject to change due to volatility. Here's the 15-minute chart. And here's your exponential moving averages. So this trade, I'm actually, it's still live right now. So I'm hoping that it rolls down lower. But if it doesn't soon, I'll be looking to exit for a very, very small profit. So 9 for 9. Worst case scenario is going to be about a 2.1 R day. Another 2R day in the books. I'm jazzed. I am jazzed. Already at my April, my entire quota for the month in the first week. I'm stoked. So let's look at some swing trades, shall we? What's interesting is I want to look at some of the earnings that are coming up in some of the bank stocks. So here are some bank stocks. This is ticker symbol Wells Fargo, ticker symbol WFC. And Wells Fargo has earnings this week. Here's the daily chart, and I'm going to take the moving averages off, and I'm going to come over here to a weekly so we can really just kind of soak in what's been going on as of right now. So on the weekly chart on Wells Fargo, notice the strength of this trend line back from 2009. This is serious. This is serious trend line. Bounce off support there, and you're coming into a major support and resistance on Wells Fargo. Could this be a double top? Could this be a head and shoulders? Could this be a distribution pattern? All the answers to that is yes. It's definitely possible. Will it break out of that trend line? I really just do not know. But Wells Fargo has a lot of room to go if it does. There are some warning signals out there on the U.S. financial stocks right now. You have a lot of them. Here's Bank of America, ticker symbol BAC, and Bank of America had a nice little bullish bounce off of 11.12. I tried to take it bearish right there. Didn't work out. Got stopped out. Here's a little bit of a pennant pattern on Bank of America, and that broke out bearish. So earnings coming up this week on Bank of America. Here's your weekly chart on BAC, and here's kind of my earnings analysis, if you will. So before earnings even comes out, I usually have an idea of what I want to see, what I expect to see, and what my plan is going to be if the stock gaps. So you have a very strong resistance at 1441. You have a very strong support at 1120. If we gap up to here, I'll probably be looking to go bearish. If we gap down to here, I'll probably be looking to go bullish. Other than that, I'm not entirely sure what Bank of America does, but the edge I have on it, just slightly more bearish than bullish. Let me give you guys another perspective on ticker symbol DB. This is Deutsche Bank, and me and my good buddy Adam were talking about a lot of the European stocks today. And I want to pull my chart analysis up on Deutsche Bank from a while ago and just kind of give you guys an idea of what I was thinking. I posted this 2 months ago on the Trading View, which is free to follow us, by the way, if you ever get a chance to. I do post a lot of analysis pretty often. But it was down here at the low. So notice it had broken the 2009 lows on Deutsche Bank. So I figured if it broke those lows, it would likely trade up and retest and then roll over. Boom! Shakalaka. That's exactly what happened. It did retest and it has rolled over on Deutsche Bank. So what now? What to do now? Well, I did some fibs today, and here's kind of a range / wave that you can kind of keep your eyes out for right about here. And I was doing it based on the daily, so that weekly is going to be a little bit off. Let me bring this here and right there and right there. Boom. Perfect. So this is the wave that I'm measuring. Bam, you can see it retraced 38.2% of the wave, and it could trade lower. Now, it obviously does not have to, but I would say on Deutsche Bank, if you're looking to buy low, 842 and 472 are some really good prices. Also, not a bad price where it is now because this is a confirmed support. It has bounced off of this location before. So it could easily form a small channel in here and do something like that. I'm not saying that it will, but it definitely could. So Deutsche Bank could be a great stock to pick up. If Deutsche Bank goes bankrupt or goes to zero, we're going to have a much, much bigger issue out there in the economy than who's winning or losing the Masters. It's really going to be interesting to keep an eye on exactly what happens on DB, because it has broken a very strong and very significant support back in these 2009 lows. Credit Suisse, the same thing. Credit Suisse and Deutsche Bank, there's a lot going on with the dollar and the yen right now. Let me look at the dollar really quick since I'm talking about it. I'll come back over here to Credit Suisse. So the dollar is coming back to a very, very strong support at 93-ish. This is the dollar index as compared to a lot of other currencies. And if we come into that support and bounce, I would assume the energies go a little bit lower. Maybe some of the financials. The yen probably goes a little bit lower, which is going to affect a lot of the European stocks. Mostly because the European stocks like Credit Suisse, they have a lot of the debt that they purchase from these energy companies that are going to zero, like Sun Edison and many more. So Credit Suisse has just gotten absolutely rocked recently. It has broken the 2009 lows. It has broken the 2012 lows. And check this out. Here's your 2012 lows, and notice broke through. Old support became new resistance on ticker symbol CS. So if you're looking at where to buy this, keep in mind that way back in 2003, there was a support down here. And if you use candles, you'll find out that the exact low was about 13, which is very, very close to where we're trading now. If you're looking at picking up some Credit Suisse, again, this particular stock, if this one goes to zero, I mean, we have a lot more of a concern about what's going on out there. And it could hover down there for a while. So I'll say any of the financial stocks I'm looking at right now, just kind of throwing this out there, don't put all your eggs into the trade. I'm sure you've heard the term, don't put all of your eggs into one suitcase. I would still say that that's going to be the case with a lot of these energy and financial stocks, the ones that are a lot of buy low, sell high. Don't just throw all of your investments into one of them. Maybe put some tester shares out there on one or two of the bigger name financial companies that are just getting absolutely pummeled right now. Credit Suisse is one of them. Again, if it breaks that support, that $12, $12.92 area support, it's going to be a really, really big deal. So is it a good buy at this level? I think at this particular point, it's a great time to buy and have a really, really good understanding and idea of where your risk could be. Because again, if it breaks 11 or 12, it's going to go a little bit lower, in my personal opinion. Here's another one, HSBC. This one is one that we were talking about, and this particular stock, if you zoom out here to a weekly chart, it's at a very, very good support coming in at 24.19. This support, if I do a line chart, is the 2009 low, the crisis level, and almost the all-time low back in 1996. HSBC. So do I think it can trade all the way to 24.14? I do. It has a very strong support here, has a very strong support here, and it's broken those supports. Guys, this stock has dropped almost 50% since 2014, 2013. That's a really, really big move. And yes, a lot of the people who own those shares are hurting, but for those who don't, and you're looking to buy low, sell high, especially some of my younger investors. And by younger, I'm just simply saying if you're under 40. Now, keep in mind, I don't have a license, so this is a very unlicensed, just an educational perspective. But even my younger investors, if you're wanting to pick up some cheap shares of some financial stocks, consider it, because Warren Buffett did the exact same thing in 2012 in Bank of America. He bought right around here somewhere, and people called him crazy. And obviously, I mean, it increased over 100%. So I think he put $9 billion or so into Bank of America. Speaking of billion, so ticker symbol MTU, Mitsubishi Financial. This company owns 21% of Morgan Stanley, which they purchased for a few, billion back in 2009. And MTU is also at a very, very strong buying zone or buying location. Another very cheap stock where zero is not far away. So if you're looking at saying, okay, well, if I were to invest, let's say I'm willing to lose $1,000. $1,000 on this trade if it goes to zero. That's your risk. That's your R. That's your risk profile. I mean, if you bought it at 441, 1,000 divided by 441 equals 226 shares. Even if it goes to zero, you can still mitigate your risk at $1,000 on this particular trade. Again, if any of these really big Japanese, Chinese, Central European, or American banks go bankrupt, I think you got bigger problems than who wins Dancing with the Stars. So I think it's just going to be really fascinating to keep an eye on some of these. There's another one out there, SMFG. It's also at a really rock solid historical support down here at 422 and also 555. SMG is one, and then MFG is the other one, and here's MFG. So again, really strong supports, good accumulation phase. So some of these financials, just something to keep an eye on. It's going to be really interesting, and I think about picking some up. And more or less, a lot of them are at some really, really strong supports. So it's a great place to mitigate risk, create a good risk profile, maybe accumulate some shares for the long term on some of these financial stocks. Just something I'm throwing your way. All right, really quick. Here's ticker symbol Apple, and I'll leave you with that one. Ticker symbol AAPL. Got a coaching student who is in a 104, 103 bull put spread expiring not this Friday, but next Friday. And that spread looks phenomenal, by the way. 104 is below the 100 simple, so that's right about there. So Apple, I have been and do want it to pull back just a little bit more. It's battling the 200 simple moving average right now. I don't have any short-term directional position on Apple. You can see that the 200 simple moving average on the daily is what we're battling with very strongly right now. Here's the weekly chart, and you're battling the 100 simple moving average on the weekly. So AKA, I want to pause here, and I likely won't have any trade until earnings, which is just a few weeks away on Apple. I would like it to see Apple pull back just a little bit farther into the 20 EMA and then bounce. If it does, I don't know if it does, but we'll find out. If not, I'm not going to trade anything until earnings. I think I could trade up all the way to 114, 116, flush lower, pull back to the 200, and then bounce. That's probably most likely, if it continues bullish, probably the biggest plan I see on Apple. Ladies and gentlemen, thanks so much for watching this real life stock review. I do appreciate it. If you have any questions about my day trades or swing trades, or you want to look at a stock that you're interested in, or you want some analysis done on a particular stock, let me know. I got an email today from another trader. I get at least one of these a day saying there's no way you're offering all of your education for free. There has to be some kind of scam. It's not, ladies and gentlemen. Click the links. Go to reallifetrading.com. And all the education that I teach there is free. All the stock reviews are free. We're just trying to enrich lives. That's our mission. And I'm excited that you guys are all a part of this incredible, revolutionary experience called real life trading. I'll see you Wednesday. And until then, remember, love life, live fun, trade. Bye.